Welcome back to MB Capital Strategies. Today we continue with the mining series. Fortescue Metals is one of the most profitable mining stocks in the world, yet it flies completely under the radar in Germany. Today we'll take a look at the fundamentals and discuss why Fortescue seems so boring to many people and why this could actually be one of the most exciting times ever. What does Fortescue actually do? Fortescue is one of the largest iron ore producers in the world. The business model is straightforward. Mine ore, ship it, and sell it to steel producers. No hype, no speculation. This is pure hard asset business. If we look at the revenue development, we can clearly see the commodity cycle. 2021 and 2022 saw record prices and also record profits. After that, there was a normalization, and currently we're seeing more of a low phase again. Despite this weakness, Fortescue still delivers 13.19 billion in revenue and 2.85 billion in net profit. This shows how stable the company remains even at the lower end of the cycle. So, as always, let's take a look at my numbers and how I'm invested. Invested with 227 euros and 65 cents. So, the current value is 227 euros and 65 cents and invested for 228 euros and 6 cents at 11 euros 33 per share. I have already received 8 euros and 32 cents in dividends. Currently, there is an unrealized loss of 41 cents. Now let's take a look at the current topic. The 52-week market range is at a low of 7 euros and a high of 12 euros, which is also where we are currently. According to investing models, the current preference is at 11.71 euros. Now let's move on to the margins and what they mean. We have a cross margin, that is the gross margin, at 40%. This means that after Fortescue deducts the pure production costs, 40% of the revenue remains as gross profit, which shows how extremely cost-effective Fortescue's operations can be. Then we have the operating margin. This is the profit after also deducting ongoing operating costs such as transportation, employees, energy, and administration. This margin is around 33% here. 33% operating margin is exceptionally strong for a mining company. Now the net margin. This is what remains at the end, after all costs, taxes, and also interest have been deducted. A net margin of over 20% is very profitable in the mining sector, and that's exactly what makes Fortescue so attractive. Even if the iron ore price drops, there is still a solid profit left over here. Now let's move on to the topic of cash flow. Free cash flow was extremely high during the peak years, 4 to 5 billion per year, currently around 1 billion. Why is it lower at the moment? There are three main factors here. First, the iron ore price is weaker. We have higher investment costs and we have new future projects. Important, even now, Fortescue is clearly free cash flow positive. This is the basis for the distributions. Now let's move on to the topic of dividends. Currently, we have a dividend yield of 5% and a payout ratio of 84%. That is the distribution rate. But that's just the current surface. What you should never forget. In strong commodity cycles, Fortescue regularly delivers double-digit dividend yields. A dividend yield of 10 to 14% per year is absolutely realistic here. And on top of that, there are almost always special dividends every year as soon as the iron ore price rises. And that's exactly the kind of cash flow I like in the hard asset sector. Volatile, but extremely strong during peaks. Now let's move on to the valuation. InvestingPro sees the fair value at 11 euros and 73 cents. The current price is around 12 euros and 14 cents, so it's practically fairly valued. With a PE ratio of 11.8, Fortescue is valued more cheaply than BHP or Rio Tinto, even though the margins are at a similar level. Now let's move on to the balance sheet quality and its risks. The balance sheet is very solid. We have total debt of 4.8 billion. We have cash of 3.6 billion. We have very low net debt and they have interest expenses well under control. What are the risks? The iron ore price is an important factor. We have demand from China and we have capex fluctuations. Nevertheless, the balance sheet gives Fortescue a lot of security. Now let's move on to the chart and the cycle. Based on the last 5 years, Fortescue has actually been moving more in a sideways trend. So, we haven't experienced any major fluctuations. We've basically always stayed within the price range that settles between €8 and €18.30 during peak phases. Since then, it has been moving more sideways. For me, that's exactly a good sign. You buy commodity stocks during boring phases, not at all-time highs. Additionally, we can also say here, we had dividend growth of 11.37% over the last 5 years, which definitely speaks for itself and is a very good sign. And that's exactly what we want to see. So why does Fortescue fit into my strategy? Fortescue fits my approach exactly. High cash flows, cyclical potential, double-digit dividends in strong years, extremely low-cost structures, and hard assets, meaning real tangible values. For me, it's clearly a building block in the topic of hard assets. So what's the conclusion? For investors who want to combine cash flow and commodity cycles, Fortescue is an incredibly exciting stock. Not a high flyer, but in boom years, an absolute dividend accelerator. For my portfolio, Fortescue remains a long-term holding. Of course, this is not investment advice, but simply my personal strategy. See you in the next video. Until then, successful investing.